Good afternoon, everybody, and welcome to Getting Your Foot in the REO Door. Ralph says, which foot? Well, hopefully we'll jump in with both and go from there. I'm gonna cover a lot of information this afternoon. However, I'm going to try to do it in a Reader's Digest version. I would ask if anybody has questions to use the question box on your GoToWebinar. We won't be going back with audio from your side this afternoon. So if you have questions about what we're talking about, my email address and contact information will be at the end. Feel free to call me, contact me, write me an email, anything I can do to help you, again, get your foot in the door. I'm all ears and ready to help you. First thing we're going to talk about is the basics of REO. And let's see. There we go. I know some of this is going to be redundant. Everybody who's in real estate and has survived this wonderful market that we're in should at least have a general idea of what REO is. And unfortunately, though, there's a lot of agents that we do business with every day that still get some of the things confused. So I thought it would be of everybody's best interest to just point blank put it out there that this is what we're dealing with. REO is an acronym basically, but it stands for real estate owned, and real estate properties that are foreclosed properties that did not sell at an auction and have been returned to their lender, and the lender that either originated the mortgage loan or one that has bought it through a bulk sale process. Of course, a short sale, which is another big term that we're having to deal with nowadays, as uncomfortable as they are. You're talking about a piece of property in a short sale where the lien holder does not own the piece of property. However, they will be giving permission to take less than what is on the mortgage. The difference between an REO property and a short sale property in layman's terms is the bank owns the REO property. These properties can close normally 30 to 45 days as if they were a traditionally owned piece of property. Of course, everybody knows that they're in various stages of repairs. The loans are a little different for them in some cases. Of course, there's special financing through Fannie Mae, Freddie Mac, even some of the brick and mortar building savings and loans have their own products for REO properties. But they are not for the realtor who will be selling these properties. They are not the headache that a short sale can be. I'll go in with a short sale. You'll be looking at on a good day 60 to 90 days, sometimes 6 to 8 months, a year even, to go through the short sale process, which quite frankly, as a buyer's agent, if you have the ability to go out and deal with an REO property here in a Charleston marketplace, you're going to get to the closing table faster and with a whole lot less headache. But again, every day we have agents that come in and say they're dealing with a bank property and they're really referring to a short sale. They are two totally different things. So that being said, that is we're going to go through some of the processes and procedures along the way, but I'm going to try to stay on as close to the topic as I can. But again, this is a large topic that we're dealing with, so we're going to skim over a few things. But I want you guys that are out there to understand what we're dealing with. So here we go. First and foremost, if you are a licensed realtor and you want to get into REO properties, more than just sitting down in front of your clients that you may know or may be in your sphere of influence, remember that you are a professional. And just like if you were going out to interview to get out of the real estate market or to enter a new field, you're basically going to be treated like you're fresh out of school. There's no other way to say that, but you're definitely going to need a resume, and not just random, this is what I've done in real estate. It needs to be formatted and presented as if you are applying for that job. You're going to need your references, and even if they're not necessarily, if you've never done anything with the banks or anything with an asset manager, you're not going to have a reference from an asset manager. But past clients, if you've ever worked with an investor, you may want to get a written reference from that investor to put in your portfolio that you would be able to send with your resume. They're also going to be looking for your proof of insurance. They're going to be looking for tax ID numbers. They're going to be, have a W-9 already signed and filled out where you can put the date, just change the date on it. Those kind of things you need to have at your fingertips at all times. We recommend that you put them in a file on your computer when you get into this process. But again, you're applying for a job, and hopefully I'll give you a little bit of information along the way today that you'll be able to know maybe where to go to start looking. I have a few things, I believe, that are coming up on the next slide or two that everybody here will want, and we'll be emailing those out to the attendees if you request them, but we'll get there in just a minute. Again, you're looking for, you are applying for a job every single time you talk to an asset manager or one of these companies, and that is something very important to remember. This slide's for Michelle. I don't think she's on today, but I thought she'd get a kick out of this. What we're looking at is a very short list of what the banks actually require every single agent to do. This is before we get to the glorious BPO that everybody wants to know about. Every single property that you deal with, these things that are here are going to be required. A property inspection can be anything from literally driving by a house to see if it's empty, to going up and knocking on the door and finding out who physically lives in that property. If you are not comfortable dealing with people on a one-on-one basis that you have never met and never intend to meet again, REOs is not something that you want to get into. You are the bank's eyes and ears, including the tax collector at that point. You are there to collect that information and find out as much information as you can possibly do for the bank. That's one of the items. I hope everybody has seen the next bullet point there is you have to be prepared to spend some money. There is no way around that. There is no way to circumvent it. You are not going to be, quote-unquote, a starving real estate agent and be able to step into the REO business without having some financial backing. It's just not possible. Every bank that I have ever dealt with in 9 years, this is the first and foremost thing that they ask you. Are you going to be able to pay for the power bill every month and have it on time? The water bills, if there's a late fee or a back payment that has to be brought current, that bank or lending institution is going to be looking into you to make it current on their behalf. Locksmith bills, lawn maintenance, any repairs that need to be done to the property. And I'm not talking about replacing a window. We're talking about carpet, paint, sheetrock, appliances. It's very, very common to spend $4,000 to $5,000 on an average on one piece of property just to put a sign in the front yard. Now, your time frames that you're looking on some of this stuff, I'll cover that when we get to the BPO section again, but you do pay these bills, and a good lending institution will have you paid back in 90 days. There are some out there that will turn those checks in 15 to 25 days, but that is very, very uncommon. And again, the line to get in touch with those people is a little harder to get to, but there are hundreds of lending institutions that have REO properties ready to go on the market. again, you will be required to speak with the tenant and the owner or the occupant and determine which one of those that is. I don't guess it's I guess the right thing to say is you need to be able to verify who you're talking to, because when they see you come up to the front door, John Smith doesn't live here even though his name is on the mailbox. You have to, again, you have to be comfortable enough to talk to these people and let them understand that you are a representative of the bank that has hired you, and that your job is to collect the information that the bank has requested, and you know that you need to be familiar with tenant laws, how often you have to check on these properties, and also be able to, if the bank calls and says somebody just called us and said that there's a moving van in the front yard and you've been working with the property for 2 or 3 months to get it listed, you have to be confrontational at that point, and be able to handle those situations. A lot of times they're, you know, obviously we can call the local municipalities, but they are not the ones, they're going to come there and sit in the driveway and say, what do we want us to do? And that can be unnerving at times. A CFK, which is what's commonly referred to as a cash for keys agreement, there is a sample of one that I'd like to show, just so you kind of get an understanding. Every bank uses a different form, and again, if you ever get into this, you're going to want to separate these, because you don't want to send your tenant or your previous owner the wrong form and send it in. But you know, when you're dealing with 35 to 45 national lenders, you need to send the right one, because again, you're supposed to be the professional and keep all this straight for the banks, being their eyes and ears. This particular agreement that you're looking at is a property in Hilton Head, where we offered $500 initially. We post these to the door for this particular client with our contact information, and then if they sign it and send it back to us, we're able to process the check, and then in other documents after this form would give them their quote unquote their marching orders, or their time frame that they need to be out of the property. Just for example, on this property, it says $500. That was the initial offer from the bank. This was a $240,000 house. They offered him $500. The owner came back and said, I will leave in 30 days for $1,500. The bank came back and said, we'll give you $1,250 if you're out in 10, or we're not going to give you anything. And we'll proceed with the eviction process, because they were the owner, they were not tenants. So we showed up 10 days later with a check for $1,250, and everybody went home. So that's a little different for each client, but again, that is a cash for keys agreement there. I have samples from 20, 30 different banks if anybody is interested in that information. Let's see. Personal property is something that we definitely has become an issue. When I first started in this, it was literally we hired companies to come out, remove that personal property, and we moved on. We had the properties rekeyed and basically hauled it to the landfill. There's no prettiness about that, but that's what the protocol was. However, within the last 18 months, on a lot of these properties, it has become necessary to have rental, either a pod or a rental storage unit available for each property that you have, where you have to store that information and then publish it, that is being stored for anywhere from 6 to 18 months before we can inventory it and then dispose of it. A monthly status update is almost a I would call it a BPO in hiding, simply because every month on every property that you have, just like when you're supposed to pick up the phone and call your owners and say, we haven't had any showings this month, the house is overpriced, I really think we need to lower the price. That's a monthly status update, and the banks want it in writing. And it is, for lack of better words, once you've done the initial BPO on the property, they're going to be asking for one of these every 30 days. The fastest way to lose a bank-owned client is to not do your monthly status updates. They'll let you slide about 10 days past that first 30 days. after once you've done that, they'll start sending you nasty grams, and the next thing you know, you've gotten a letter releasing your property. So they are very, very important, but again, they're basically wanting to reestablish your market value that you put on, and we all know in this market things change very rapidly. So again, every 30 days, no questions asked. Let's move on to the next slide, please. I hear it probably every day, if not 2 or 3 times a day, when I'm talking with agents about getting into REO business. You know, everybody says, well, just do BPOs, just do tons of them and tons of them. And honestly, that is one of the best ways to get your foot in the door. However, don't go out and start doing BPOs and expect to get business in, you know, 30, 40 days. It's not going to happen. The banks don't operate that way. Just to put it into perspective, when I got into this business 8 years ago, handling REO properties, we started doing BPOs. I have consecutively done anywhere from 400 to 600 BPOs a year, every year, and then we've hit strides where we've done over 1,000. What you're doing is putting your signature card at the bottom of every one of those BPOs that you do. That's why they're so important. These asset managers don't know you from Adam. They want, you know, they're going to go look. If you're working for one particular client that only handles a certain bank's properties, that asset manager is going to see your name at the bottom of those BPOs over and over and over again. Most BPO forms, as I'll show you here in a few minutes, actually have your contact information, your broker's contact information. So at any time they can look, because that BPO belongs to the bank, even though it's your opinion, because that BPO belongs to that client, they will put them in a file, and they periodically will go back and pull and just call the agent directly. It happens to us or me, I should say, it happens to me on a fairly regular basis. Every month or so I'll have a phone call from a bank or from a property we did 6 months ago, wanting to know if we're interested in doing business with them, or if there's any more information that they can dig out of those. They don't throw those BPOs away. They use them. The banks that are using BPOs to establish values, that is, for lack of better words, it is a mini appraisal. I hate to use those two words together because they are not the same thing. If you know, a licensed appraiser is not going to do a BPO, and a licensed real estate agent is not going to do an appraisal. They are two different animals, and they should be treated as well. It is just your opinion. You're going to have banks that'll tell you otherwise, you know, well, and then you'll have banks that will steer you, tell you, well, you know, we know it's a 3-bedroom, 2-bath, but go ahead and bump out another 10 miles, and so that you, if you've got 20 comps in front of you in a neighborhood, use them. But they're asking for your opinion, so you need to be able to back that up. If they come to you saying, well, these aren't what we're really looking for, we want to go out to a certain other area, you need to be able to back up why you used the comps that you did. Let's see. I have a list of providers that I mentioned earlier that I'd like to give everybody if they're interested in it. That would definitely be the first way to get your foot in the door. It's a little small right here, but there's 110 companies and email and website addresses there, direct links to about 108, 110 BPO companies that do business in South Carolina. That would be your first way to get in the door for that. And again, we'll be able to get that out to you guys within the next day or two. Let's go to the next slide, please. Okay, kind of covered a little bit of this, but what is a BPO CMA? Broker price opinion is just what it is. It's your opinion of what the property is worth. It is based off of a competitive market analysis. However, there's more detail in a BPO than a CMA. Again, you are the eyes and the ears of the bank. These guys are sitting in a desk in California. They don't know about Goose Creek, South Carolina, or Mount Pleasant, South Carolina. They have no idea. To them, it is a loan number, an address, and a square footage. That's about all that they're going to know about your property. So, you know, when you sit down at a client's table and you present them with a CMA, they already know what their house looks like. You know, so you're bringing the market data in a CMA. With a BPO, you are basically going to give that that asset manager or that bank representative everything they need to know, as if they were going to go physically get in their car and pull up in the driveway and purchase that house, because they've already purchased the house in a lot of these cases, but they don't even know what they bought. There are a few different formats for the sample. There's a few sample BPOs that I've had put on here in various. This is a 2-page BPO where you have 3 actives, 3 solds, and you give a market value. You can see very easily this one's handwritten. Yeah, that's my handwriting. I like to do them on the computer. That's the reason. But it's still, if you sat down and read this form and not knowing anything about where you are, what you're doing, you should be able to determine that this house is in a decent neighborhood, surrounded by similar properties. What you're seeing there are the MLS printouts from our Hilton Head MLS. And that gives a description of every single comp that we've used. I believe there was only actives on that. So that is one form. That is a handwritten broker price opinion. The next one is, I believe, going to be a computer generated, a little bit different. This is actually JP Morgan Chase's form. That's what they use. It's all computer generated. It's done in Excel. You can also do it with OpenOffice, but however, everything is typed in. You don't have to worry about your handwriting, and it does make a difference. This was a house in Daniel Island that I sold last year. And again, you're taking pictures of the comps. It looks very similar to an appraisal, but it is not. Again, 2 different animals, and this is worth $50, $65. The other one's going to be worth, you know, $300 or $400. A few other things you want to know about real quick. It is your opinion. It is not the gospel. And you are going to have people with the banks try to tell you what your opinion is, and that's okay as long as they can back it up. There's a lot of people out there that try to rush through BPOs and try to get them done 30, 45 minutes at a time. When you've been doing them for 10 years, that's acceptable. You know what to put in the forms, you know what to do with it. But your first couple of BPOs that you're going to do, 5 or 6 hours, I mean, it is what you're looking at. It's going to take you a day to get the right information in the right places. Do them right or don't do them. There's too many agents out there that just are not, they don't care. They're looking at the $50 that, by the way, may or may not come, and when it does come, it may be every 90 days that they actually pay out. So if you work for a company and you do 20 BPOs for them, they're going to send you 1 check. However, if you work for one company and you do 1 BPO for them and they only pay out every 90 days, you're going to wait 90 days for that check. This is not money tomorrow business. This is working your business in the future. One thing that's very, very important is to follow their guidelines. That's why every order that you get is going to have a set of guidelines with it. And if you might have done 100 BPOs for one company and they change their guidelines and they don't tell you because they expect you to read them, and you start getting them rejected. If your orders get rejected on a regular basis, they will stop using you. They'll just remove you from your list because they don't have time. They're dealing with thousands of properties. You're dealing with 1 at a time. They don't have time to sit down and explain to you over and over again what you're doing wrong. They expect you to learn to read and do it from there. Well, the biggest thing about BPOs, do them on time. I know this says down here, early is on time and on time is late. The way the economy is and the way that people are doing banks properties right now, people go out and they'll take 6 orders, and then it says it's due at 12:35 p.m. and at 2 o'clock they're still typing away on it, and the banks call and say, we've already found somebody else to go out and do it. So if you're late, you don't get paid. That's just that simple. Okay, one more thing. There are so many, and if you've been in this business long enough that you start getting spam and emails and everything else, you will find out there are hundreds. There should be a apostrophe S beside that, but there are hundreds of different services out there that say, hey, pay me $1,000, pay me $499.95 for 1 year's worth of service, and we will promise you that you'll get business tomorrow. Probably 98% of those are a waste of your money. They're going to get rich off of you paying them $499, and the other 100,000 agents out there that want to do that too. That money adds up pretty quick, but it'll slip out of your pocket before you can blink. Just be very careful. Ask somebody else if they've ever used a service. Remember that you're supposed to be the professional. You should be going out to get your business. Don't let somebody else hand you business, because it's not worth the time, the effort, and the heartache. You really should be out looking for your own services and going from there. This says send your resumes directly to asset managers. Well, you have to know where to get those lists from. Again, you need to find a mentor that can help you walk through that process. Find out from, LinkedIn is phenomenal. Facebook is great. What is it, branched out now? There's several other media services out there for companies who are looking to hire. Some of them may not be looking to hire, but you can certainly find out enough information about them to know whether you want to do business with them or not. Trust me, you take a BPO company that doesn't pay their agents in a timely manner, you Google the name of that, and the first 10 links will be, they don't pay on time, they don't do this, they don't do this, don't mess with these people. And on the flip side of that, if they're good people, you'll know about that as well. People will sing their praises when they get paid on time. Okay, I know that is a short kind of introduction to what we're dealing with. However, it would take hours to really go into detail on what you're dealing with. I guess my biggest thing here was I want to make sure that the agents that are interested in doing this know what they're jumping into before they get there. There is no golden pill here. You have to work at this. And if you're willing to work at it and become a successful REO agent, the rewards are great. Not a whole lot of praise in it because you're the bad guy, but it will feed your family, and that's what we're all worried about in this economy, as far as I can tell. You see my email address up there. I'll be happy. Every email that I send out has my information at the bottom of it. But if you have any questions or anything that I just sailed right over that you didn't understand, or I'd be happy to answer any questions that you might have. But that's it for me until we get some questions.